I love peeps. So yes, of course, I am late to the party, but I personally have to do my due diligence about everything that I'm going about. So in this video, we'll be talking about the new IPO that TransJamaica has just listed. Granted, it already open already, but not close it. So still going to talk about it because I was doing the financials. Most of this video going to be about the financials because it's good. But yeah, just a little overview of the prospectus, what trans is, and yeah. So if any of that interests you, stick around. Don't forget to like, share, comment, subscribe, tell a friend. With that, let's begin. Alright, off the bat, this is not really an IPO. It's not an IPO, it's an offer for sale, which means that there's no new shares being added to the market. It's just an existing shareholder. In this case, it's NROCC, which is the largest shareholder selling their shares. So basically, the government will sell their stake in TransJamaica. So essentially, NROCC is offering 1.750 billion shares to the public for offer, with the possibility to increase it by an additional 750 million shares. Granted, they have 2.501 billion shares, so yeah, they have the first option where they're selling a portion of it or about 14%, and if it actually upsides, then they'll end up selling out everything. So they're selling about 14% of them stake in the first batch, and if like oversubscribed, then they'll sell the additional 6% that they have. Right? So the key details is it's selling at $3.06, and honestly, I was happy when I saw it. Even though I did predict it based on the announcement, or did some reverse calculation, and I did make a video about it, giving the exact price that they're going to sell it at. I put it right here, so that 10-11% discount would make the stock price offered at about $3.59, $3.60, or them can just decide to sell it back at market price, which will make no sense. But so the offer opens March 4th, which today is March 9, mean that it's open but it not close it. It don't close it. More than likely they're just going to make it stay the full 10 year. And basically they have 700 million shares reserved for strategic individuals, and then they have 1.05 billion shares for the general public. Now the purpose, or the reason why they're selling, they're going to use about $183 million for, like, fees. So JSC fees, lawyer fees, etc., marketing. They'll use that for it, and in remaining balance of whatever left, the government will, they never tell you. They'll say they'll decide. So we don't really know. And that is also fine. The Minister of Finance will decide what they want to do with the money at that point in time. No, as I say, most of this video going to be financial because it's better, it's better to look at it that way. I'm just going to give a rough overview of the company per se, and then, we'll jump in afterwards. As the second highest, most consistent dividend paying company on the JSC, TransJamaica has been around since 1998. They essentially operate the Mount Russia bypass, connects Kingston to St. Catherine. And over the years since 1998, they have acquired more concession agreements to other roads. So they have phase 1A. This segment is from Kingston to Sandy Bay, that was completed in 2006. They have phase 1B, which connects Sandy Bay to Maypen, and that was completed in 2012. And you have phase 1C, which is the most recent one, which is Maypen to Williamsdale. They're not collecting toll from that as yet. It was supposed to be in August, then it pushed back to March 31st. So we'll see what happened with that. And their most profitable one, which is Kingston to St. Catherine, which is T2, is their most used toll and also the shortest toll. So in the grand scheme of things, TransJamaican Highway really just operates the toll and maintain the infrastructure essentially. And they have tolls that span from Kingston to St. Catherine to Clarendon to Manchester. So there is that. And this concession ends in 2036. However, they have the option to renew it, so it goes up to about 2070, give or take. And recently, give or take 2022, they acquired, you can say 2023 because I was in December, but 2022 they acquired GIO, which is TAJ controls the road per se, but then GIO usually is where they'll go and have the machine that lift up and you pay. So yeah, so they acquired it, and it has been doing wonders for their financial statements. You will see. But yeah, there's not much to say. It's a very simple company and it's the best way to go about any business model, understanding it in under 5 minutes. But yeah, I'm going to need some pros per se, and I guess some risk. I know just jump to the financials because it's really the financials we are about. So one, you have consistent growing traffic. Everybody want to drive, and also the toll raises each year for the most part. They have a cap as to how much they can raise it, but it raises every year. I think it's about 10% they can raise it per year. But yeah, there is each year. They're expanding the roads because they're adding new lanes, they're adding reverse lanes, they're doing a lot of stuff under the radar, but they're not really posting it or making noise about it. And that is good. It's good when you have a company where they're making moves, and until the move is big, 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 they're not gonna really, say anything about it. That is good. And I guess maybe Donovan is maybe that type of person, I guess, because he's been with NROCC for 15 years and now with Trans 4 pushing 5 years. So we are in good hands. Also, they're solar powered. I'm not sure if they're 100% solar because the patrol bus them use gas, but they are predominantly solar powered, green energy. But yeah, for themselves, give or take. And also a good thing is that at one point, one of the issues was everybody usually rather pay with cash, but now they have made it convenient to get a tag or even just to obtain the tags. So no more than about 50% of the persons that take the toll use the tag, which is good. It helps with efficiency. Um, yeah, it helps with efficiency in the grand scheme of things, and it frees up the toll road better. Frees up the toll road, and they've been actively advertising, so I can see that. And the risk are just, you being seriously pessimistic. So the fluctuation in, like, traffic, and if maybe another COVID come or something like that, and people not traveling as much, then more than likely, yeah, that might affect them profits. Natural disasters and them something there can have mash up the road and them something there. But I believe they have enough money in reserve they can fix it back. So that's not really much of a problem. And government, like how the government probably selling out the stake, they may have some regulatory issues. But we're not going to dwell on those stuff because it may not happen. This is just being super pessimistic. So there is that. And essentially, that is really it for Trans Jamaica. Honestly, I've been talking about Trans Jamaica for a minute now. Years, years. I've been saying, yo, good stock. One of the very few stocks on the market that you're relatively safe. Relatively safe. Good dividend exceeding 5% per year consistently since coming on the market. Is good. It is good. Um, yeah. Let's jump to the financials. Way lovely people. You can also apply. I guess you can apply on all of the brokers. At first, it was NCB and JMB, but now you can apply on basically every broker. Say a lot of persons actually made videos on the different, the different companies and how you can apply them. You really need that here, so uh, but yeah. So I just jump to the financials and appreciate it, guys. I'm going to have a rant. But this is like after I post it, I rant about the two IPOs, them we drop back to back and thing. But I'm waiting for the offer to be closed before I even say anything. So yeah. So I don't want anything to say to be to influence anybody. So when the offer close and thing, then I'll make a few comments and back to regular scheduling. But I was happy doing the financials. I've not been happy in a minute doing financials. So yeah, back go to the financials now. Alright, lovely peoples. Of course, I've put a little extra love in our, trans. And like literally I was waiting for Q4 come now say Q4 they'll come out to kind of get a better layout how I go on. This has been like 2019 was a year before trans the actual company market kind of 2020 come. But regardless, it was in the IPO, so I'm just pull it. So we have 1, 2, 3, 4, 5, 6 years of financials. And to be honest, it's honestly very rare that you see a company make more money and basically use less to make their amount of money. Because off the bat, my zoom. So not even the other income, but if you're supposed to add it, it'll be more. So revenue and toll rate. If you look in 2019, it was 53, and in 2020 it dropped because COVID situation. It go 45. This is in basically millions. So you call this millions of US dollars. So 45 mil, and then 52, 65, 75, and Q4, which is the latest one we drop, 82 million US dollars. Right? As you can see, it has effectively gone up over the years, especially from when we would have access to it. So 45, 52, da da da. But then when I look at, well, I had to calculate it. So the cost of goods sold, if you look at it, so this will basically be like how much it costs them to basically make it. So you can either use either, but this would be operating expenses. So this is probably more ideal one. So if you look, it's a negative 36 mil, negative 31 and 34, and then in 2022 something happened in 2022, and from there say you can notice negative 30, I call it 40 million, and then it dropped to 22 million dollar, and it basically going down while still making more money year over year. And the reason for this, especially this part where I can like see it or justify it, is because in the acquisition they acquired, same acquire uh GIO, and basically they're saying that they estimate that it will be my annual savings of approximately $12 US. One of the other things that I really like about Chance is that when they make a statements, they typically hit or underball them expectations so that it hit the goal line at $12 million. If you do the math here, so when they acquire in 2022, if you add the 12 to, they can say even more than $12 million the operation has dropped. So yeah, it is really crazy. So more than even $12 million it dropped. So that is good. So basically, as you can see, the revenue has like net profit has also been growing up. So it's not about just gross profit. Net profit has been growing year over year. And if you do the math right here, so from 2019 from 2024, they have moved from 8.3 million to 31 million in net profit. And as well, you can see not only is this stock a dividend paying stock, it also earnings per share for the investors of year over year increase. And it is just good. It is just very good. So there is that. Now, after that, we're going to jump to the DuPont analysis, and then I'm going to show you something still on financial. Because you can see we have couple things to talk about, honestly. So DuPont analysis, as you can see, the profit margins have been increasing, especially since 2022. which it kind of understandable because them spend a lot of money. I don't think they actually went into debt for it. They just spend it off the books. So we understand. And so basically from 2022 going up, everything's supposed to actually be technically better. So profit margins have been going up, especially since they did the acquisition. Return on assets also each year has gone up year by year. Leverage leverage is up but not down. Uh may I seem them actually pay off some of them expenses significantly, so it kind of dropped. So so return on equity, especially for the last 2 years, has been pushing 50%. So it is good. However, visual representation and DuPont analysis, as you can see, is leverage has significantly fell because this is leverage. The blue one right here, so is leverage. The first one, as you can see, leverage. You can see that it was high and now it is falling essentially. And everything else now has been, it was a dip, as I say, in 2022, because I know that affected their financials because they become like full on debt for it. So there is that, it has been actually going up over time. So yeah, and I think because I pull so much numbers, and this is a YouTube video, I just did do some summary for it. I also want to show you it's been a consistent dividend payer. So I know it go on in a 2019, 2020, they make a big payout to whomsoever them shareholders from then. But as you can see, they have been year by year increasing. I guess this year the final numbers don't reach yet for Q for like them do them complete year. So we don't know if this will change, but this is the closest we can get. And as you can see, they've been paying more and more and more dividend each year because I think when they actually release the prospectus, go back on what would it be? Let me see. Probably in the structure, yeah. Because this was in. Let me see if I can find it. Show you. Alright, so here, so where they were giving a little chat up as to what they plan to do with dividend, 5.3 to 8.0% between 2020 and 2025, and they have honestly maintained that rate. And this is off the $1.41 that released since IPO. So yeah, so then it would be 24% to 35% thereafter. Um, from I guess 2025 to 2036, and then I guess when the concession agreement roll over back because they have they have the access to actually do back over another 30 odd years. Yeah, so we saw. However, up to 2036, it is it is looking lovely, and I'm going to show you. I'm going to use this to kind of give like a price as to what you can kind of expect the price to be because I've been using this like on don't know basically to like gauge what they're going have the stock price at, and it's been accurate, but it's not any form of conventional analysis. It's just me who maybe get. All right, so as relates to ratios now, efficiency ratio is going to be you'll see. All right, wait. So current ratio. Alright, current ratio and quick ratio essentially going to be the same because as relates to quick ratio, it means current assets minus inventory over current liabilities. And because trans don't have no inventory, so it kind of makes sense because see there, it's just recently them have something and it's it's negligible, honestly, it's negligible. But we'll still put it regardless. So you want to know say the current assets they are performing pretty well. These are good. This would mean 1 to 1 in Q4 that M finally can cover them current liabilities with them current assets. But honestly, like Chance really have no current assets like that. So that's what I say, oh, as really ratios, these are going to be skewed. Because for example, inventory turnover, all these figures going to be negative because there's no inventory to turn over. So that will be this. And the number of days in which inventory is tied up The inventory is the service that they're providing, which is a toll. And you literally have to pay to cross the toll. So as you pay, you go across it. So that means that you not really a hold up for no days. And collection period, as I say, them here, all them number here, especially them here, I could just skewed through and through. So you know what I'm saying? Because you get the money same time and like you have persons who trust the tool. So there is that. There is gross profit margin and net profit margin. Uh the reason why this is negative and this is positive is because there was, I guess, some rebate. It has to be rebate. There was some rebate on, let me see if I can find it. There was some tax rebate basically that they probably get, and it helped fluff them up for that period. But after that, and after the following year, then it's just been gradually going better. And for the last 2 years since they've acquired GI, it was one of the biggest expenses on the sheet. They have been pushing the 50 odd percent mark. Well, so 42, then 50% basically. And as it relates to net profit margin, they're now in the 30% bracket as it relates to margin, which is good for net profit, especially for a company making that amount of money. So, yeah, as you can see, as it relates to debt to equity, you can see at, I guess this will be 2022. Yep, 2022 was a real turning point for them. So 2022, they did use some form of debt, and that's why I gone up. But now they have just been using the equity that they have for like facilitator and stuff, which is good. It's been going down. Hopefully one day reach one are in at the zeros, but this was one. And cash correlation for them was attributing them being just I use the money either a fix up road or pay out dividend or something, so it been enough. But since them can free up them pocket, they can see that things have actually been turning around for them. So yeah, and I don't think this was even in their IPO plan to acquire GIO, but I can probably stand corrected. So yeah, so this is basically the main things that are pulled out of the like each of the statements them, like what people that probably actually care about. And it was just to like give a visual representation of what's going on. So as relates to the income statement, the blue one here you can see your earnings per share, like a revenue has been just going up, 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 dip, but now it's going up, up, up. As relates to operation expenses, as I say, from the mark of 2022, you can see say just a drop, drop. So that $12 million actually showing up itself now. Finance cost essentially has been flatline for the most part, and like them really take on additional debt. Them just go on service what them currently have, and net profit or net income over the year, as I say, from them touch 2022, they have been just on the up and up. And it is operation cost going down, but it's the net profit going up. So good, good, good. And then EPS, honestly, it might look minuscule. So I guess you maybe just have to look on the numbers as is. And as you can see, it has been growing because it's a 000310006, which is basically double this up, and then 002, and then 0025. So it been a going to do itself. As relates to the balance sheet now, they may help people probably really care about, honestly. So this is the balance sheet. The total non-current liabilities, it is high at one point and then it kind of gradually fall off. Total assets and total non-current assets have been around the same. Honestly, have been around the same. So it no drastic, no really changes. Them acquire, so I guess that push it up a little bit. Outside that, there was nothing. So shareholder equity means that the shareholder equity and the accumulated profits, which will be like retained earnings, have been going up. So their sheets are looking better. And since I made the video as it relates to the stocks that would be like my stock picks for the year, and I did body calculations, like like coverage ratio has actually gone down. So that is good. So essentially that is it for the financial statements. Want to go, we have a couple more left. We're going to basically glance at the moves that they'll be making, essentially from been keeping track. first off the bat, it listed on the market at $14.1 billion. All right, $14.1 billion, which them sell 80%. Bear in mind with this. So $14.1 billion. They've been quiet for like maybe a year or two, and then bomb them come out and then buy the JIO, which is people in my later for past there. So for pay that little infrastructure building right there, so that some of them go up. Yeah, that is it. And as you can see, and this was in 2022 December. So say 2023 going forward was better, as everything they can see, everything has been a drastic turn. Everything has been a drastic turn since the 2022 mark. See, things significantly I go down and I go up. So yeah, you see what I'm saying. Oh yeah, and the dividend apart, but dividend actually, the dividend, as I said, make some big payout before them come to the market, and then here so it flat out a little bit, and now them incrementally pay it out. And I feel like what they're doing is they're paying based on the stock price. So them consideration is based on the stock price. So I'm gonna show you what we do for reach our dividends. What about acquisition? So JIO, um, yeah, I think we did highlight it as well, and yeah, so I'm gonna highlight and I say you can see the drastical difference in the operating expenses. It drastically dropped since 2022 compared to 2023. So there is that. They're going to be having a new gas station on the Portmore toll. Evidently, I feel like they probably soon have it at all at toll plaza them, but they must start with Portmore. And it's not just a gas station. I feel it's actual like plaza complex that going be over there, because I've been over there and it's big over there. That's all I'll say. All right, so the next thing is the phase 1C of the highway, the concession agreement basically. So in July 2024, TransJamaica secured a concession for phase 1 of Highway 2000, extending from Maypen to Williamsville, which is that stretch of road where I drive on free go country, cause yeah, the road nice to drive on, but we've not them not start collect toll from that. So probably um I'm not sure. I'm not sure when they should be March 31st should be the time, because that was their projected time for like start collect money. So we'll see what go on. We will see what go on. But I must say, by offering US that plus a potential additional amount based on performance, the expect operations in August 2024, which never come out, because at that point we remember them, we said them do it, and then the news come out and them say, oh, they're gonna do don't wait till next year, which will be this year. So basically I can see what go on. So the completion has completed, and them not gauge it yet, but they basically have all of the phase A to C. So basically now it consists of phase one, which is between Caymanas and Sandy Bay, phase 1B between Sandy Bay and Maypen, and the Portmore Lake. So I know them are phase three. So wouldn't see the revenue from that as yet, because even in them dividends, like before, well, they can't show up on dividends stuff. They did mention phase three. So all them projections there based on the dividend did not include what profits them that make from phase three. So phase C, what am I say phase three? Phase C. So maybe dividends pay out a start with more or stuff and thing, but whosoever get it at the $3.60, but they get in, cause why? Nah, go about this. Anyways, so after that, no, I guess the last one is this, which is the government I sell less percent for almost the same amount of money. So yeah, my name junk food. But yeah, we still go into um that, because the way how they even presented the offering did kind of wild. But I'm just gonna go through right now. So as relates to allocation, I cut it up in a way where I feel like person would understand, like the average person would understand, because sometimes I wonder why they make these financial statements up. So anyways, now find the actual thing. Alright, so this is the expectation for consideration. Alright, the way them do this, I'm sure most people not really understand that way. Because they're just showing the allocation of what they're selling. Basically, they're not really sure everything. So you can see the amount in Jamaican dollar. This is the option. If not, it's upsized and executed. So 6.3 bill. But if you fully upside, then it's 9 point some billion dollars. So there's the name of the US equivalent, just the same. So there is that. But can just a mental image of this in an head, me go to it the way how I would understand it. Alright. So this is the original offer as it stands. So NROCC currently have 2.5 billion shares, and the general public and strategic investors would have 10 billion dollars. Guys, honestly, if we sit down and figure out who have what and what a percentage, not really carry much weight. So this is the so in total them have 12 point in total amount of shares outstanding for trans is 12.5 billion shares. Alright. So now we just put it together where I guess you might understand a little bit better. So yeah, what already on the market is we just put it at the same $3.60 they must sell it for. Because honestly right now, I don't think this is even $3.60 because when I checked it was like $3.80. So half the bat gone up already. But we just for this sake working with this. So what's already on the market? So what's already on the market? We have 10 billion shares. So this is what anyone has like at the partial subscription. So this is where them have, and this is the amount of shares like currently as it stand before the offer close. But based on what they have as relates to this, they're basically based on the general public. If the minimum subscription is held, they would have they would be basically able to buy 1.1.05 billion shares, and strategic would be able to buy like 700 million shares. All right, and these are just the dollar values for them. So it's really this multiply by this, figure this. So there is that. As you can see, I think the percentage now would like I don't want to say the word, but like make it easier to understand. So currently 80% upon market. If this is the mid, like this is like if everything that get subscribed, then 8% are added to the general public. So there's 20% to 8 from it, 5 from strategic, and then Trans would have 6% left for themselves. That's if everybody do take up the offer. Alright. So that would be the total. So Trans would no longer own 20%, they might now own 6%. Alright. And basically what they have, this is a bit them amount left. So they might have 750 million shares left and $2.7 billion it would have probably um, worth. But probably as a coupon market are automatically worth more. That is just if the offer is not fully subscribed. If it's fully subscribed now, things different. So market now would have as it stand 80% before the market before it drop. And then now general public would have 12, strategic would have 8%, and in chance have nothing. Means that them fully sell out everything them have and them get the money and them go on the maze. So I think that is better explained. And as you can see when you do the maths, everything basically squash out back. So there's no addition of shares or anything, or no dilution. It's just change of ownership basically. So yeah, and it's good that they give you a discount because I don't think we're thinking about this price ever again. Uh, but yeah. Next thing now. So relative valuation. Relative valuation are really just two service industries within the scope of things where you can measure it with. The real Kingston Wharf, I would have used cargo handlers, but it may not be in market, so there is that. The fair value for trans as it stands is $2.79. I don't feel like this is accurate, but is the math of it, so probably this overvalued, probably the company here, or undervalued, we don't know. We do not know. As I say, relative valuation is just relative valuation. Alright, there is so much other factors that constitute like the actual value of a stock. So it's just an easy way you can like 1, 2 maths and figure out a number we can work with. Alright, so there is that. As you listen to dividends now, dividends have been here, and this is what I want to show you. Trans has made the statement to say, hey, 5 to 8% between 2020 2025. We'll look on this. So based on 2020, so 2020, 2024 basically, they have 6%, 7%, 6%, 7%, 5% can add up, they make a 2 times them pay in that 2024. Alright. So they have been holding on to the word after 5%. And even though the stock price has essentially gradually increased year over year, them still maintain it. And that's why I say when them go to dividend consideration, you're seeing that they're matching what they say. So now 2025 basically maybe that year probably still gonna still get like the 5-ish%. But going forward, say you'll probably be getting more. And also while at it, the dividend coverage ratio for it can pay 15 mil this year, and income and the reserve basically 62.5% the dividend coverage ratio means it'll take 62% of what them have as net income for the year for actually cover dividend, assuming them make no money for that particular year. And then based on this, then probably can do this maybe 2.5-ish times completely before they run out of money if they make money for a particular year, which is not gonna, but worst, absolute worst case scenario. So there is that. Now, this is what I was saying about the stock price. Like they've been following the same price basically after the 141. You can see that each year it was 5% and 6% and 6%, and then in 2023 it became 13% of this and then 13% of this. If we're following the same logic and say when 2026 come now and then start the 18% and 35, 18 between 18 and 35, you can see say the stock price may go all the way up to $9.09, but this is, as I said, my band way of looking at it, because they have been holding their word and Donovan been there for a minute now. So, and they've been holding their word. So I feel like it might actually hit this price, because when it was at last year and I was doing the math, I'm like, all right, so you can actually hit $3.04, $3.40 or so. And it passed $3.40 gone now. Now this is financial advice, by the way. Thankful financial advisor. This is just a random youth on YouTube. Just I work with some numbers, alright? But with this and relative valuation, you can just bust it two and you can say, alright, you're gonna divide the $9 something plus this right here, so you can get it at like $5.94. So even at that price, it's still above currently what it is, and I would be surprised if it actually hits it. So $5.94, we see if when it hit that price over the next 2 or 3 years, we have this, say, they call it. Last thing per se really is just the price action phase, like a visual representation of how Trans been performing, and JC, we know say this is how to make the money, but Gargoyle still get the information. Anyways, so yeah, this is how it's been stagnant for a minute. So imagine if you just get a buy, because I've been buying here. I've been buying. But so it'll go up, it'll go up, it'll go up, it'll go up, and it drop down a little bit. And any Forex persons here, I can know say from a resistance, meet a support, and two ways. I go up and go to the $5 mark that I said, or you can go down and come back here, so, and then go up. But this is as low as they push it, so up from now. But yes, lovely peoples, that was my try and treat fast, because this was quite a little bit of thing. But yeah, so this was financials for TransJamaica. Yes, man, I'm late. But of course, love you guys. Also, I do have a stock course. I've been seeing people buying it, but nobody's reaching out for them one on one. I do have a stock course, guys. You can go buy it, support it. For a moment, lend me your imagination, and without telling you exactly what it is, minus the title, I'll try to provide a concept rather than a boring definition. That said, here goes. It was a typical day for Trisha's burger restaurant. However, she noticed that more and more persons have been coming to her restaurant over the past months, yet she is unable to actually serve everyone and has to be turning back away persons. And the
This
reason
is
for this,
how, keep the channel alive. Not really. It's just to keep the servers alive and teach you guys. But before, as I say, if you guys not planning to open an investment account, please do not buy a stock course. I would rather you not. But I actually want investors, persons who willing for invest and go through. You don't have to sit down and go through the whole like nobody like me, but you have my money JA, which make it really really easy. You can also use Garrett 876 to get like $5 off the subscription, and you can get all this information right at your fingertips for all the stocks in the market. So yeah, of course. Love you guys. Don't forget to like, share, comment, subscribe to a friend, and yeah, catch you in the next video. Peace. Sorry, some late. I'm always late, but me have to actually do my due diligence. I'm not gonna just run just so. So, yeah.